we're going to walk through how to set up and run the activity for what happens when the Federal Reserve raises interest rates. You'll want to refer to the lesson packet for the discussion questions, answers, and other materials. When you see this graphic or hear this sound, that means there's discussion questions we're not going over in this video to save time. The time required is 45 to 60 minutes. Materials needed. Materials for the activity are 22 strips of construction paper. Each strip should be 2 inches by 12 inches, a black marker, and stapler or tape. Preparation. Staple or tape 2 strips of construction paper together. These will be used to create headbands for 11 student volunteers. Refer to the preparation section on page 2 of the lesson plan on how to label all 11 headbands. Procedure. Start the lesson by showing the video Making Sense of the Federal Reserve. After watching the video, refer to procedure steps 1 through 4 to provide students with more information about the concepts in the video that apply to what they need to learn for the lesson. You'll need to ask for 10 volunteers. Then give each volunteer a headband. Here's a teacher tip. We suggest having the taller students more towards the end of the line. Instruct students to wrap the headband around their head and staple or tape it to fasten it. As the volunteers are getting ready, hand a copy of Handout 1, Chain of Events, to all the other students who are not participating in the activity. Ask the student volunteers to stand in numerical order from lowest to highest. Once they're in order, ask them to state their number and who they are / what they represent for the activity. Tell students observing to enter the name of each represented group in the appropriately numbered box on their handout as volunteers introduce themselves. Point out that the first box is filled in for them with target range for the federal funds rate. Instruct student volunteers to turn to create a line in which they all face the same forward direction. The volunteer representing the target range for the federal funds rate should be at the head of the line. Display visual student line and describe the directions for the line as follows. The student at the head of the line should reach their right arm out behind them. The second student in line should reach their right arm out in front of them to touch the hand of the first student and reach their left arm out behind them to touch the hand of the third student. The third student in line should reach their left arm out in front of them to touch the hand of the second student and reach their right arm out behind them to touch the hand of the fourth student. The fourth student in line should reach their right arm out in front of them to touch the hand of the third student and reach their left arm out behind them to touch the hand of the fifth student, and so forth. Essentially, the odd number student should reach their left hand forward and right hand back, while the even number students should reach their right hand forward and left hand back. Step 7 on pages 4 and 5 and the diagram on page 9 provides additional details. Instruct students numbered 8, 9, and 10 to bend at the knees. The remaining students should remain standing upright. Stand near students 8 through 10. Remind the class that consumers borrow to buy goods and services and businesses borrow to invest in capital goods. Explain that the FOMC has noted the economy has slowed. Consumer borrowing and spending, number 8, have declined, and business borrowing and investment, number 9, have declined. Unemployment is rising, that is, employment levels have declined, number 10. Tell students that in this situation, with a sluggish economy, the FOMC would lower the target range. Instruct student 1, who represents the target range for the federal funds rate, to bend at the knees, and that as they do, they should pull down the hand of the student behind them so that student 2 bends at the knees. As student 2 bends at the knees, tell them to pull down the hand of the student behind them, and so on, until each of the first 7 students in line are bent at the knees. Point out that because the FOMC lowered the target range for the federal funds rate, other interest rates in the economy have decreased. Instruct student 7 to push up the hand of student 8 in line. As student 8 stands, tell them to push up the hand of student 9. Instruct student 9 to push up the hand of student 10. Now, students 8, 9, and 10 are standing. Discuss the questions for step 11 on page 6 with the students observing the demonstration. Go over number 12 with your students. Explain that when the FOMC moves the target range for the federal funds rate and other interest rates in the economy are affected, influencing the spending and investing decisions consumers and producers make. In this case, the FOMC lowered the target range for the federal funds rate, so other interest rates decreased. Consumer borrowing and spending increased. Business borrowing and investment increased, and employment increased. Tell students they will try another demonstration. In this case, the Fed is concerned that the economy is expanding too rapidly and that inflation is rising beyond the Fed's preferred rate of inflation, 2% over time. Instruct students 8, 9, and 10 to stand on their toes and wave their arms in the air. Explain that this represents increased consumer borrowing and spending and business borrowing and investment, and that this results in increased employment and inflation. Ask for another student volunteer. Give the student the construction paper headband for number 11. Instruct students 8, 9, and 10 to reconnect with the students in front of and behind them. Instruct student 10 to connect with student 11, inflation. To recap, students 1 through 7 should be bent at the knees. Students 8 through 11 should be standing. Tell students that the FOMC would raise the target range for the federal funds rate in this situation with inflation increasing. Instruct student 1, who represents the target for the federal funds rate, to stand up straight, and that as they do, they should push up the hand of the student behind them so that student 2 stands up. As student 2 stands up, tell them to push up the hand of the student behind them, and so on, until each of the first 7 students in line are standing. Point out that because the FOMC raised the target range for the federal funds rate, the other interest rates in the economy increased. Instruct student 7 to pull down the hand of student 8 in line. As student 8 bends, tell them to pull down the hand of student 9. Instruct student 9 to pull down the hand of student 10. Explain that when spending and borrowing decrease, inflation will decrease. Instruct student 10 to pull down the hand of student 11. Then tell all students to return to their seats. Discuss the questions for step 17 on page 7. Explain that when the FOMC moves the target range for the federal funds rate and other interest rates in the economy are affected, influencing the spending and investing decisions consumers and businesses make, which then influence employment and inflation. In this case, the FOMC raised the target range for the federal funds rate, so other interest rates increased. Consumer borrowing and spending decreased, business borrowing and investment decreased, employment decreased, meaning that unemployment increased, and with less spending and borrowing, inflation decreased. And that's how you run the activity portion. Final review questions are on pages 7 and 8 of the lesson plan.